Did you know that an expert revealed that now is the best time to buy Tesla stock these days appeared to be a confusing time for the Tesla community in general? Investors are on edge as to whether they should sell their shares, while others believe that buying Tesla stock at a lower price is the best thing they could do now. Watch till the end to find out why. It is a known fact that Tesla is extremely volatile, but so are other stocks. Even in 2021, when Tesla stock was following a downward trend, an investor said, "Anytime you get the chance to buy it, buy it," as Tesla stock dipped at the time. In June 2021, the managing director of Ives Advisors at Rockefeller Capital Management, Michael Biffus, told CNBC that Tesla's roughly 24% market share at the time and ambitions in the electric vehicle space and clean energy markets make it a name worth watching. Tesla is going to continue to be the leader in the industry, especially for the foreseeable future, Biffus said on Trading Nation. "When you think Tesla, you think innovation." Today, the company recently released production and delivery numbers that fell short of Wall Street's expectations, which caused Tesla stock to decline once more. However, some experts argue that this is the best time to buy Tesla stock because it is now cheaper. In fact, one well-known investor and Tesla bull in early October, after the EV company published delivery and production data, Cathie Wood and her company ARK Invest purchased Tesla shares twice in October. The second purchase occurred following the company's Q3 results call. In a recent piece headed "Good News for Tesla Investors," the stock is now oversold. Barron's, although Tesla shares have recently seen a particularly harsh period, which has been difficult for the bulls, the article suggests that they may soon be receiving some respite. Barron's is an American weekly magazine publication published by Dow Jones and Company. Canadian clinical psychologist Jordan Peterson is a well-known figure in the media. The best option on that front, according to author and emeritus professor at the University of Toronto, is to buy some Tesla stock. If you're interested in buying an electric car, don't buy one with a diesel engine for an emergency backup vehicle or an electric power generator. Arguably one of the most innovative businesses in the world, Tesla is expanding quickly as customers turn to electric cars to counteract rising petrol prices. In the second quarter of the year, Tesla revealed that it delivered 254,695 electric cars worldwide in the second quarter, below FactSet projections of 264,000 and down 18 from the prior quarter. Although the second quarter proved to be difficult for Tesla, the company seems to be in control overall. The slowdown was partially caused by an extended coronavirus shutdown in China, and restrictions around opening manufacturing facilities in Austin and Berlin also had an impact. Nevertheless, deliveries were up 26.5% from the same period last year. Even at the new gigafactories, production was significantly impacted by global supply chain issues and rising raw material costs. Additionally, lockdowns hindered consumer demand as China continued to implement its zero-COVID policy, despite the fact that Tesla generated $621 million in free cash flow and grew second quarter sales by 42% year over year. Moreover, at Tesla's annual shareholders meeting in August, Elon Musk, the company's CEO, said that while manufacturing efficiency may be Tesla's strongest competitive advantage, he also mentioned that one of the company's biggest long-term opportunities is the semi-truck, which he said would start deliveries as soon as this year, and the Cybertruck should still be on track to launch next year. May also be found in artificial intelligence-powered robotics. Musk reaffirmed the target of 20 million vehicles by the end of the decade for the majority of Tesla customers, saying the company may reach a production run rate of 2 million vehicles by the end of this year. Although Tesla's stock may appear expensive given its valuation, the firm has consistently generated enormous revenue and earnings growth, and its yearly earnings projections for the third quarter indicate that the company's development trajectory is still very much intact. Over 365,000 automobiles were produced by Tesla, and over 343,000 vehicles were delivered. Tesla claims that as manufacturing quantities rise, it is getting more and harder to find vehicle transportation capacity at a fair price. According to Tesla, at the conclusion of Q3, the business had increased the number of cars in transit since it had started to shift to a more balanced regional mix of vehicle builds each week in Q3. Tesla announced Q3 2022 revenue of $21.45 billion versus $21.96 billion predicted per Refinitive's analyst poll, and adjusted earnings per share of $1.05 versus 99 cents per share. Tesla's net income gap for the third quarter of 2022 was $3.33 billion, while the company's automotive gross margins were constant at 27.9%, the same as they were in the second quarter of 2022. In the same time frame previous year, Tesla declared $1.62 billion in earnings. The automaker's cash balance reached a record $21 billion last quarter, with operating free cash flow of $3.3 billion. Speaking of long-term investors, most analysts believe that Tesla stock is better suited for long-term investors rather than short-term investors. Long-term bullish investors place their hopes on fully autonomous vehicles, while dozens of companies are working towards that end in one way or another. Experts believe that the future looks bright for Tesla, and while a PE above 70 is an extremely high valuation, if the company continues to grow at or near 50 for several more years, that won't seem so rich for investors looking years or decades down the road. Buying Tesla now could make sense. According to Goldman Sachs, Tesla's usage of cameras, radar, and GPS has advanced over the years to the point where Tesla vehicles are essentially self-driving. The stock of Tesla is highly in order to take advantage of the green inflation trend and rising oil prices. Goldman Sachs selected Tesla and a number of other EV-related stocks in March. The bank's analysts gave the majority of the stocks a 50% potential upside, and they believe that innovation in electric vehicles will continue to fuel investor growth in 2022. Despite the stock's increase, Goldman Sachs analyst Mark Delaney thinks Tesla still has room to grow. Following a meeting with Martin Vischa, Tesla's head of investor relations, Delaney expressed confidence in the company, stating that it would maintain its buy rating and set a price target of $333.33. Delaney also projected a 22% increase in the stock price. Even Deutsche Bank research analyst Emmanuel Rosner was more upbeat about Tesla overall. The firm views Tesla as one of the most attractive stories in the auto sector. While investors shouldn't obsess about a company's progress over just a 3-month period, they still watch quarterly results as they help detect trends that can confirm or refute what stock analysts have been saying about a business's prospects. That said, some investors have worried about demand destruction as EV competition swells globally. Still, business remains robust for Tesla. In fact, in the previously mentioned Q3 earnings call for investors, Tesla CEO Elon Musk stated, "I can't emphasize enough, we have excellent demand for Q4, and we expect to sell every car that we make for as far in the future as we concede." That's exactly why the company has spent billions to build its 2 new manufacturing facilities in Texas and Germany, as well as upgrading its Shanghai plant. The China plant can now produce 1.1 million vehicles annually at full capacity. It closed in on that run rate with a monthly record 83,135 units in September. The company has also said its energy division, which includes battery storage and solar rooftops, has more demand than it can supply. Sales from that division represented 5% of total revenue in the third quarter. Despite challenges in its supply chain and logistics, Tesla is clearly doing well. The company expects production to still reach its 50 annual growth target, but investors question whether the stock is priced fairly. The trailing 12-month price-to-earnings ratio is still above 60, despite the fact that net income has increased this year. If the multi-year 50 annual growth level holds, the PE will decline relatively quickly. Experts believe that investors shouldn't rely on any stock to guarantee a certain return over just 1 or 2 years because there are many factors, such as the current supply chain risks. The company produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Despite being best recognized for being a divisive leader, Elon Musk has also made bold forecasts. Deliveries of the Tesla semi-truck are scheduled to start next month, after it was initially introduced over 5 years ago. Even though Tesla's stock has dropped by about 50% from its peak, investors who are looking for a long-term investment opportunity may wish to seize this decline and purchase some Tesla stock right away. Don't forget to subscribe to this channel and enjoy your viewing experience.